You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again to rock out with the option block, your favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever fun Options Insider Radio Network. Of course, quite a few programs. If you're subscribed to this one, A, thanks. B, we got a whole network for you. So if you're so inclined, you may want to head over to your provider of choice. Could be iTunes, could be TuneIn, Stitcher, Google Podcasts, wherever you get your favorite shows. And grab the whole kit and caboodle. Grab the whole network. That'll get you the full slate of 15 programs. You guys can really sink your teeth into all that options goodness. Of course, you can always just stream it over there on the website as well as read all of our fun written content. We do a lot of that as well. It's not all radio. It's a lot of radio, but it's not all radio. You can get all the good written stuff over there at theoptionsinsider.com. And of course, if you'd like to join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlr, MIXLR, our nice audio streaming platform there. So you too can get all the latest up-to-the-minute goodness. A lot of goodness popping off today, or perhaps not so goodness if you're a bull out there. A lot of stuff popping off today. We're going to get to that in a bit. Let me introduce my cohorts here. My partners in crime are going to help me do that. Let's start out over in, let's go in order of weather shields, because I know they have one and the other one does not. So, of course, I'm talking about that paradise on earth. That is St. Charles, Illinois, where we are joined by none other than Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. And do you have your talking pants on, sir, today? Because A, it's an active one, and B, I know it's Thursday. That means it's strategy block time. Are you psyched?
Why, did something happen in the market today?
I don't know. I haven't even logged in yet. So we'll all find out collectively together in a few minutes.
Yeah,
I saved the suspense for the
happened.
show. Yeah, well, it's nice. It makes the show much more suspenseful that way when no one knows what the heck is going on. All right, and speaking of not knowing what's going on, we are also joined by the meatball himself, Mr. Mark Sebastian, the greasiest of meatballs, coming to us from OptionPit.com by way of Carmen Line, Mr. Pitt, a.k.a. Mr. Meatball, a.k.a. Mark. Welcome back to the show. What's going on? And I hear you got a little fun event coming up soon if you want to hit on that now.
Oh, yeah. Well, we've got our Professional Trader Summit, and I think we're going to do a live option block September 27th to the 29th. We got early bird pricing. I think if you go on the show notes or you go on and want to listen to the show on Option Insider, there'll be a link to get yourself registered, so you can check that out. And more importantly, the S&P sold off today. And it was interesting. Usually, I mean, Mark, you and I talk about this all the time. How often is it that the S&P is the dog and VIX is the tail? Almost, generally speaking, the VIX has been really reactionary. Well, guess what? VIX got it right these last couple of days, these last couple of weeks. The VIX futures have been trading at a huge premium to the cash index. I think on Monday, before all this went down, the VIX was 960, 9.5, and the August future was still 1130, I believe. So there was a really wide spread. There was a lot of fear already built into the futures. Well, a lot of that has come to fruition. We've seen the cash index make a big move. It had already started to move the last couple of days. Well, now some of that's starting to flush out.
I'm legally prevented from commenting on that further because we're not technically in the trading block. So without further ado, save that because we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
I love to dive right into the fray there. But the lawyers, they get on you if you don't keep things locked to every segment the way it's supposed to be. They're very into format over there in law school. It's first class you take in business law. It's media formatting, so it's good stuff. But that said, Mr. Meatball, continue. I know it's been interesting. We've touched on this a bit on vol views as well, kind of what's been going on out there. People have been positioning for a while in VIX options, like maybe a pop was coming. We saw a little bit of premium out there with the futures. So yeah, VIX a little bit prescient in this case. You're saying?
Yeah, VIX got it right this time. It's been not so hot, but I'll tell you, it got it right this time. It was ahead of the curve on Tuesday and Wednesday, and we started to see this today, an actual sell-off, almost 1.5%. I believe that constitutes an actual sell-off, and why? I'm looking at the world, all right, and make an argument with me for being long right now. Make a really good argument.
Uh-oh. I think you just you're waving the bull in front of Tosaw here. You know that.
Them's fighting words.
I know. Give me a really strong reason to be long. Would be really the question, right? You had up until today, you had a historically low VIX. You were at within 0.5% of the all-time high. I've been saying this for a while, if you don't have a hedge on, or you're not, if you were in this market with a 9 VIX unhedged, you were either stupid, lazy, or both. And those that were both or stupid or lazy, they ate it today, and deservedly so. And I think it could get worse. We are set up for a little follow through tomorrow. I mean, even at 24, whatever we're at right now, we're still pretty darn close, within what? Less than 2% from the all-time high. Less than 2. If my broker called me up and said, hey, the VIX just went from 9 to 16, and you could retain 98% of what you've already made, I like, what?
I think Mark, the Skype gods aren't smiling on Mark, so while we get him reconnected, it is an interesting point because we kind of have made this on this show and just about many other networks or shows on the network right now that obviously there is skew to be factored in, but still with VIX hovering in single digits, market floating at all-time high, if you weren't taking some sort of protective bent on with your positions, then you were. I can co-sign that with Mark. Maybe a little lazy, maybe a little stupid, maybe a little bit both. Certainly, if you're managing money, you were not doing your fiduciary duty to have some sort of protection. That said, speaking of managing money, Uncle Mike, a lot of things for you to unpack there. First off, why would someone be bullish? Secondly, I know you spend most of your days protecting and paying for that protection for your clients, so you're certainly not in that latter category. So first off, I guess respond to Mark while we get him back here. Why would you be bullish now? And then B, walk us through what's been catching your eye, and then C, what have you been doing to protect your clients in these run up to today's sell-off?
No, those are very good questions. I'm going to answer them in a different order just because I do have reasons to be bullish right now, but I'm going to wait till Mark comes back to go through those. In terms of what's catching my eye and what we're doing to protect people, initially, and I've talked about this on the show before, the collar that we put on several months ago was one where, and there's a little bit more to it than this, but we were basically in SPY, we were long the 215 put, and then we were short the 235, 255 call spread. And when we got that drop in vol back in, I believe it was May, you have to look to see what the exact dates were, we bought some volatility, meaning that we took off we were also short the 195 put. So we basically bought back the 195 put for a few pennies and we rolled down from the 255 call to the 245 call. So for the most part, we've been protected from 245 to 235 for a while with this. So haven't really, and we gave up the upside between 235 and 245. We're totally fine with that in the hedged section.
And I'm back.
Portfolio.
The Skype gods smile upon you again there.
Finally.
They let him back in. That's a good thing. So we've been protected on this for a while now. This today really isn't one to where I'm not viewing this as a market participant of saying, holy cow, we got some crazy stuff going on here yet. I'm not there yet, and I'll explain a little bit, or I'll explain why to that in a moment. But with that being said, in terms of what have we been doing to hedge it, well, we've already had the hedges in place that I just explained, so it's really not too much of a concern as of yet. We got probably another, at least we have a ways to go yet before we have our lines in the sand to where we start to have to decide, well, should we put on more of a hedge? Should we take off the hedge and buy more, that type of thing? We have a ways to go before we're even at that point. So in terms of being hedged with the larger money within the portfolio, that's one to where today doesn't even raise an eyebrow to me. In terms of the question, what's catching my eye, a couple things, and this will kind of lead into to Mark's question, why would you be bullish right now, which this is going to be a banter that we have coming up.
I didn't say why would you be bullish. I said why would you be unhedged long?
Okay, got it.
You know, why would you just be naked long the market right now?
Oh, yeah, no, people that do that are just stupid all around. We already agree.
Stupid or lazy. Yeah, they're either stupid or lazy or both. And,
got it. Okay, got it.
You know, and you know, this is why options are so important. Now, is there a bullish case for the market? I would say, you know, I'm not as bullish as you. I would certainly say that. But I am, you know, I think that I don't think this has to be a big long sell-off, but I do think it sets up for the classic Thursday bad, Friday worse, Thursday bad, Friday worse, Monday awful, and then bounce. I think that does potentially set up. You know, this is the closest that I've seen all year where we could see the VIX break 20. I would say that is 100% in the cards for the way things are setting up right now.
It could. Let me ask you this though, because typically if the VIX has in a lot of cases like a 10-to-1 ratio to the S&P, and this is the VIX itself, and I was curious to hear what your take on this is. So let's say the S&P, it's down 1.4% on the day today.
Yeah.
The VIX, on the other hand, the VIX cash is up 45% on the day. That's definitely more than the 10-to-1 ratio.
Correct.
And I understand the futures, the near-term futures were up a little bit already, but how would you explain the VIX having such a behemoth move today in compared to something more typical with the down day in the market?
Well, I think there's a couple of things. One, you got to understand where VIX is coming from. It'd be a lot of those ratios that people historically look at is when VIX has been hanging out 12, 13, 14 for, you know, some time. So if we were at 15 and we had a day like this, you probably would have seen that ratio. But with really a lot on the table for some follow-up, and the fact that VIX was still pretty historically low yesterday on the close, I think that's a big thing that pushed volatility and the VIX index higher. And it made a nasty move this morning. And then it looked like, you know, some people came in and tried to sell it. They were unsuccessful. Vol just kicked people in the face. Yeah, I mean, it really looks like Vol looks like it wants to go to, once you get that big break of 16 like we got today, Vol kind of looks like it wants to go to 2021 or more. This again, from how high we are, I think that you could see a lot of people decide to take money, especially after they saw today, right? Your average person that doesn't use the sophisticated hedging techniques of RCM wealth advisors, specifically Michael M. Tosaw, they're just like long a bunch of stocks. if you were just long a bunch of stocks and you saw what happened today, and you saw how much your portfolio is up on the year, and you saw how much your portfolio is up in the last 5 years, give me one reason you would hold. You know, your downside risk is 5-10%. Your upside risk is we V-bottom and you're buying 24.90 again, right? I mean, so what? Yeah. It's kind of a layup if you're just you're a classic stockholder.
No, it's interesting. We have been talking about that for a while. You know, people have been feeling that. Granted, we haven't seen the run up in VIX to perhaps signal that the turn was coming. But yeah, this is something we haven't talked about in vol views for the last few weeks, and we're always cautious to kind of point this kind of thing out. But it did seem like I don't know if you can say the worm was turning, but all of a sudden that type of positioning that we used to see a lot out there in VIX, just week after week, pretty much went away for the entirety of 2017. It was starting to come back. The short 1x2s, massive upside call buys. That's always a good signal in and of itself. And that crazy, funky risk reversal that netted out to 500,000, a million. I think it was 1 million contracts total. I think it was 250, and then 500,000 on the upside. So they were just massive, massive positioning for something other than the aggressive selling we've seen for quite some time. So perhaps that was a signal. And you're right, with all that positioning out there, once it's already broken the near-term level, which is probably broken of quite a few backs out there in VIX land. We talked many times about I think the journal called it the volatility feedback loop, that everyone, their mother was short and they continued to be short. And some talk even recently about hedging some long-term Vega with some near-term selling, which of course kind of reflected that of course we broke out of that range today. So it'll be interesting to see, I think, going forward. A lot to talk about on vol views tomorrow, too. I have to say, Uncle Mike, it's got to be gratifying a day like today, because a guy like you is always out there, looking for ways to pay for puts and looking for ways to pay for puts. And, and you're constantly having that conversation with your client. Why are you spending money on my upside when we can just keep rallying, the market's rallying? So I have to imagine a day like today got to be a little bit gratifying for you.
Well, I mean, it's gratifying, but ultimately, though, the portfolios do still go down somewhat, just because of the fact that it is a down day, and I am the bull with which I am. But yeah, I, on a day like today, it's one where you really have to just kind of and it's very, the BBI was definitely up today, and that the kidneys are definitely going to be in some pain today, that's for sure. But it's one to where you have to really have an understanding of where you are with a lot of different things. There are spots to where I have money in cash, to where, like, I've been waiting to sell some puts on IBB, for example, with money just been sitting in cash. And I think I finally might be able to do that tomorrow. Still want to see it drop a little bit more. So it's kind of that fine line of, right now, do we take some profits on some long put and some hedges, or do we kind of let this ride to have the continuation? So it's gratifying, but yet this is where we go to work.
This is where they pay you the big bucks for. So it is kind of funny, too, because just yesterday, I think the meme coming out of a lot of the people we watch and people who watch the market day in, day out was that, the market had kind of was shrugging off the whole fire and fury thing. In fact, a lot of people were retweeting this GIF of the old Seinfeld just kind of shrugging GIF, because the market didn't really seem to care. And of course, we roll into today, and all of a sudden, people do care quite a bit, it seems like. So we were waiting for a while, a little bit of a delayed reaction, but it seemed to finally come in. Speaking of delayed reaction, we are getting to now. There are still some names. I know it's all macro right now, but there are still some names popping off after the bell here that I know a lot of you guys watch and a lot of you guys like to sling. Let's start off with I know this is your counterpart's favorite over there, Mr. Meatball, the Rock Lobster. He was extolling the virtues of Nvidia quite a bit on the last show. I think it's a hot one over there in your pitch chat. They closed today just shy of 165, about 164 and change. They've been on kind of just almost about a year and a half tear now, where it seemed like the market collectively woke up to the fact that they're making chips for everything everybody wants to use these days, all these mobile portable devices. And so the market liked them. They not so much selling off. They were selling off about 4%. So outpacing the market to the downside quite a bit. They were pricing in some pretty good juice as well. They were pricing in about a $15 straddle, and coming in that's about 9%. So far in the after hours market, liking what they're seeing, so reversing some of that trend up to about 169, up about not even 4 handles and change. So shy of 3%, about 2.7%. So far, not seeing that big 9% move that the market was pricing in there. And then the much maligned Snap a name that everyone has kind of just loved to pile in on since they went public. Couldn't really defend those levels out there, the IPO, and it kind of hasn't really looked back ever since. Closing today, $13.77, up about, actually bucking the trend today, up about 1.5% when everything else was pretty much down. They were pricing in, shall we say, an aggressive $2.25, or about 16.5%. So a bit of a move they were pricing in there. And so far, this thing is delivering, not quite to that extent, but it is moving. It's off about 6.5%, just shy of 13, about 1270, 1280 in the after hours right now. So we'll pay attention to those. Mark, I know your crazies, your hardcores, and your pitch chat. Were they slinging a lot of Nvidia today?
I think we're so concentrated on UVXY, I'm not even sure we got a chance to really deeply look at Nvidia. It's been such a really hot name. And it is up nicely. I mean, well, think about this. It's a quote unquote up, except for it was down 7 today, and now it's up $4. So it was pretty, it has not made up what it gave away today. So it looks like earnings were good, but nothing really happening.
Yeah, up in air quotes for that one when you sell off
exactly.
$7. It's kind of hard to say up. But you're right. I mean, they've been on a run, so maybe they're due for a little bit of a retracement here as well. And Snap can't seem to get out of its own way. I'm kind of watching the live tweets coming out of the Snap earnings call, and they're saying it looks like it's a pretty bad miss. So we shall see. The market slacking them, not quite crushing them as much as they priced in. So we'll see. We'll keep an eye on those listeners as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block, the portion of the show where we break down what was happening, what was going on, what caught our eye on the weirder side of the options market today. Quick recap here at the top. You guys are always asking us, what's up with these crazy, funky Musk life insurance, call them whatever the hell you want, these catastrophe puts out here in Tesla. Did they trade again today? And the answer is a resounding yes. Another 380 of these Jan 2019 50 puts, yes, 50, hitting the tape today, almost 400 more going up. Total of 28,473 open on the strike, so getting back up to those lofty levels we were at last week, right around 28,500. We shall see where we're at tomorrow, if all of this is opening or not, but all you guys keep asking us, yes, they're still printing for size. One of the larger, more active strikes out there in Tesla today. These Jan 2019 50 puts, do with it what you will. Let's move on to some of the other paper that was lighting it up today. I don't know, Mark. I'm just going off on a limb. Was there something going on, perhaps in the Korean Peninsula recently, that would perhaps cause some action in Korean-related names? Can you think of anything out there that would do that?
Samsung had earnings yesterday, and as you know, they're the largest Korean company.
That's what caused the panic on the Korean Peninsula. It was Samsung.
Correct. Samsung earnings.
I must have missed that. I must have missed that news release. We're kicking things off here with the iShares MSCI South Korea Index Fund, ticker symbol EWY, EWY. Surprise, surprise, things not looking robust out there in Korea of late. I think a little bit of fire and fury having a wee bit of something to do with that as well. Closing today, $65.81, off about 2.5%, or about $1.66 out there. This is the name that's been a little bit active of late, about 8,000 contracts a day. We've been kind of this ratcheting up verbal dance between Trump and North Korea. So that's been injecting a little bit of fire out there. Today doing 11 times that, 88,000 contracts, about 3.5 to 1 puts over calls, about 70,000 puts almost, and about 20,000 calls out there. So go figure what people want to do out there in Korea. Yeah, they want to get some downside. Kind of hard to blame them given all that's been going on out there. So we saw a bunch of trades out here. A lot of them had similar themes to them. The themes were pretty much trying to buy puts and put spreads, and then sometimes financing it with calls. We saw the first one going up this morning. It was the OC 60-64 put spread going up 4,000 times. Paper buying that for about 80 cents. and then turning around and dumping the OX 70 calls to finance that. So actually collecting a little bit of a credit there, getting like almost 40 cents to do that one, which is kind of nice, doing those for $1.18, doing that 4,000 times. And then a little bit later, kind of coming in and saying, we like some SEP too. So doing the SEP 66.63 put spread, buying that 7,000 times, and then turning around and dump in the SEP 69s 7,000 times as well. Net buying that spread for about a 20-cent debit. OI negligible on pretty much all those strikes, so that's all opening there. And then if that wasn't enough, we saw an hour later a funky SEP OC diagonal going up. It was the SEP 64 OC 60 put spread going up. Looks like paper buying the SEP 64 puts, selling the OC 60 puts, doing that for about 18-cent debit out there 6,000 times. Again, opening on both strikes, negligible OI. So market seemed like it was kind of I think a put palooza is the best way to describe that out there. Kind of hard to fault these people given what we've been seeing out there. I mean, the panic around Samsung earnings, who can blame them?
Right. Well, this leads to the old saying, buy them when you can, not when you have to. I would ask, where were these puts trading last week? My guess is they were extremely cheap. Volatility was really pretty nutty. I nutty low, and now look at this. It's crazy high. This is why a smart option-based hedging program almost always makes some sense. And now these people just ended up having to pay up, and that stinks. Stinks for them.
But
good
Mark,
for whoever got to sell it.
But Mark, they sold the calls, so it's all good.
Oh yeah, well if you sell the calls, how can you lose?
Then it's
right?
It's gravy. They got a credit for one of these, so they're good.
Oh yeah, no, there's no way they can lose on that, and there's no way that we could V bottom on that.
Juice for free. But you're right. It's not like there's been hints coming for the last couple of weeks that maybe something might happen out there on the Korean Peninsula. It's not like we've been clueless as to what could possibly go wrong. In fact, this index surprisingly has been tracking up quite a bit of late. It peaked at about almost $72 back in like the last week of July, right around the 24th. So a few weeks ago, this thing was peaking. It was at some pretty 1-year highs, and now surprise, surprise, turning around on the downside of that. So interesting stuff. We'll keep an eye on these. I got the feeling this is not going to be the last Korean related paper we detail out here. But yeah, kind of just scrambling to get those downside deltas, pretty much however they can get them. And funky stuff. That diagonal's a little funky. I need to look at that one a little bit more. That's an interesting choice that way, but interesting nonetheless. He's kind of a reverse. Usually see people selling the front month, not time you really want to be maybe short a lot of gamma out there in Korean gamma. Dangerous thing to be short right now. Let's move on to another name that I know you guys are familiar with over there in Pitland. Mr. Meatball, excuse me. This is XRT. This is, of course, the SPDR Retail ETF. All sorts of flavors of SPDR. This is the retail version. 12,000 contracts a day is what this bad boy averages today, doing about 44,000. So not quite 4X, but getting close on it. About 40,000 puts and about 5,000 calls. So there you go. Pretty funky day out there. 8-to-1 puts over calls. That should tell you what kind of caught our eye. And it looks like it was, there was a lot of prints going up out here. The one that really caught our eye, though, was out here in the SEP weeklies, in particular, September 1st. Looks like a bit of a put spread, or perhaps probably more likely a roll. The SEP weekly, so expiring on the 1st, 41.39.5 put spread, going up 6,100 times to start. Looks like paper selling out the 41 put 6,100 times, buying the 39.5 puts, the same number there, doing it for about 70 cents. Looks like the OI on the 39.5s is negligible, so that's clearly opening. About 7,200 on the 41 puts, and a total on the day of about almost 7,200 of those puts have traded. So it looks like perhaps our friend here rolling down, not surprising the name sold off today about 3% or about $1.25. So this name, perhaps he's deciding to take some of these in the money puts that perhaps are working in his favor and roll down a question Uncle Mike is wrestling with himself right now out there. Not in XRT, more in broad SPY, but still I think a problem a lot of people maybe are wrestling with right now who had the foresight to hedge. So it looks like our friend here deciding to do that. And also, interesting enough, later on in the day, we did see 2,500 of the straight up 39 puts going up as well. They went up close to the end of the day, so they didn't have a chance to parse those a little bit, but that's kind of funky as well. Maybe someone deciding, maybe turn around even to blast those out to finance some more of this this ratio roll, which is weird if you're rolling. Why would you do that? But interesting stuff nonetheless. XRT, we talked about it a few times here on the show of late. This thing has kind of had a bit of an interesting roller coaster run. You know, kind of if there was a narrative for late 2016 into 2017, it's kind of been the death of retail. We've seen this index kind of follow suit. It peaked at about $48 back in early December going into the holiday season, and it kind of hasn't really looked back. It's traded all the way down to about $38 since then, dropping out down there back in early July. Had a little bit of a resurgence of late, getting up into the low 40s, but can't really manage to sustain that. A few sparks of life in retail, not enough to keep this index afloat. Well, that said, Mr. Mark, I know you like your XRT, you like your retail names. What do you think of our friend here deciding to keep the downside party alive, or we can factor it in as he's still concerned. He's rolling his meatier puts to a wee bit less meaty puts here in XRT.
Yeah, it looks like just a delta rebalance, right? He wants to regain some upside exposure now that his puts have worked, which is an important facet of setting up a hedge. Hedges are only good hedges are only hedges if you do something with them. If you just sit on them, then they don't work. They tend not to be not all that effective. So that's kind of an important thing to wonder about. So, Mark, actually, I want to bring something up in the odd block. I have an odd block quiz for you. And Mike Tosaw. All right. So, as we know, the VIX settled over 16 today. All right. Now, yesterday was the second day in a row in which the VIX had done all kinds of rallying 2 days in a row, and it had really moved up and down and kind of been short squeezied a little bit. So what do you think was without cheating, what was yesterday's most active option in the VIX index?
I like these. The most active one. And it's not going to be the 2019 SEP 50 Jan 50 put like we saw out there in Tesla land. So the most active in VIX yesterday, I'm going to guess because we see a lot of people clustering around that front month, I'm going to guess it's still front month, except for our friend who did that crazy risk reversal and skewed up all the numbers. I'm going to guess it's probably, I'm going to say the 20 strike. I'm going to say 20 strike calls, front month 20 calls.
I'm going to go with the same expiration month. I'll also say front month, but I'm going to be a little bit closer. I'm going to say the 17 call.
All right. It was the August 11 puts. They bought 130,000 August 11 puts yesterday. They were so certain that the market was gonna rebound.
Wow. That's fantastic. That's like when the number one options position in like VXX is like upside calls. You know, it's like what's going on out here in these names. That's great.
So people were so certain that it was gonna just be have its kind of little vol pop and then go away that they got caught flat-footed. And those puts that they paid, 50,000 or 55,000 got paid 35 cents. They are not worth 35 cents today at all.
That's awesome.
So,
well, it's hard to fault them. The trade worked every single day of the year so far, except for one.
It did.
We were just joking on, I think it was Russell who said on Vol Views a couple of weeks ago, the vol trade has gotten so tight now that you can't even wait hours to sell this thing. You got to wait minutes after the pop to get in and sell it. Clearly, Our friend was trying to take advantage of that yet again. Maybe he listened to Russell on that show and cost himself 35 cents, about 100,000 times? Or
yeah, that's only, $3.5 million or something like that, something along those lines. Nice. He's probably not that happy.
That's lunch for guys like you and me here. But still, that's a good data point. I like that. I'll go 11 puts. I like that. That brings a smile to my face.
I knew it would. That's why I wanted to talk about it.
It's not, someone else out there is clearly not smiling, or at least his risk manager is not. But we at least can smile on it. So at least he can take joy in knowing that someone took some joy in his pain. All right, let's wrap up the odd block here. That was pretty odd. I'm going to have to tip my hat to that one. We've got another name we haven't talked about here in quite some time. I don't know if we ever actually talked about these on the odd block. Maybe we have. It's Urban Outfitters, ticker symbol Urban, URBN. Closing today, $17.19, off about $1.11 or about 6%. This is a name that does about 5,800 contracts a day. Today doing about 33,000. Pretty active day. About 2-to-1 puts over calls, and that kind of is in line with what we saw here in our paper today. It was kind of a couple of themes. It was like put sellers and call rollers out here, which is kind of interesting. It's worth noting they have earnings coming up on the 15th, so this is all some pre-earnings paper. We started off the day seeing paper blast out a couple of big blocks of the AUG 15 puts for about 20 cents. First a block of 6,100, then about 24.70 piling in later. A total of about 15,000 and change coming in on the day on that strike. The OI is 14,000, so it looks like perhaps someone deciding discretion, the better part of the value there, and dumping out this name. Of course, today's sell-off probably didn't hurt either. If they were sitting on a lot of those long puts, maybe not a bad time to dump them before the earnings. Maybe you got your earnings move in here today. We also did see, looks like a bit of perhaps a roll going up out here as well. It was the AUG SEP 19 call spread going up 5,000 times. Looks like paper buying the SEP, selling the AUG. No OI to speak of really in SEP, and about 5,900 in the AUG. So probably a roll. Not 100% there, but it looks like a roll. Maybe someone deciding to get the heck out of Dodge here, going through into the earnings. Earnings are part of the AUG expiration because it's not till it's the 15th, but obviously earnings are after that. So interesting that they would choose to roll now as opposed to waiting until the announcement. But we've seen stranger things. It is the odd block after all. So someone closed out about 2,200 of the AUG 20 puts. So some deep in the money action going on here on the put side, all over the place here in Urban. So not waiting for the earnings. They're getting their action in now. Looking back at the year that's been, there has been some action out here. This thing spiking back in November of last year, right around Black Friday, about almost $41 out there. And it's kind of been following a similar trajectory to XRT and pretty much the rest of the retail sector, pretty much directly downward, stopping out here. Got as low as about 16 and change. But it's flirting with those levels again today. Like we said, closing about 17.20 out here. So not looking good, but some weird paper. Mr. Meatball, I know when you're not watching size money be wasted on VIX puts. I know you like watching your retail clothiers. What say you to the woes out here in Urban Outfitters, as well as a lot of this surprisingly sizable pre-earnings paper going up here?
It's another retail name. Retail's been so bashed. There will be some cream that end up rising to the top. And, maybe one reason why this guy may have moved his puts around is that maybe he or she took their corresponding long position off. A lot of these big, huge trades, especially in the retail, are hedges. So this could be just a hedge adjustment.
Could be weirder stuff. We have seen weirder stuff. We'll keep an eye on this one as well. Earnings coming up pretty soon, so we'll keep an eye on these. Meanwhile, though, it's Thursday. It means it's time for Uncle Mike to put on his talking pants. It's time to open up the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, you guys know the drill. This is the part of the show where Uncle Mike comes on down from the mountain to dispense some options, wit, and or wisdom. Today, he's going to have a very special strategy block today where he explains to us why he decided to buy 100,000 AUG 11 puts in VIX for 35 cents. Have at it, sir. Explain.
You know what? Hopefully, maybe that was a guy that was like really short a bunch of stock, and maybe he was thinking that could be some type of a hedge. Maybe, why don't we hope for that?
There you go. I like it. Optimistic outlook from Uncle Mike, as always.
Maybe that's it. All right, what I want to talk about today is when low volatility does not stay low and it becomes higher over the course of one day. I'd say that's rather timely for today, but I want to kind of go through a few things. First off, I want to cover what I'm doing right now in the leverage section of my diagonal spreads with which we've been doing. First off, in terms of the amount of money with which is at risk, let's assume that the market went to zero tomorrow within that strategy, and we actually have, and the long premium I have, the short premium that I have on all this stuff I'm about to explain, everything just totally went out to zero. With the amount of money that I have on the table, basically I'm playing with the gains in terms of the year. I think that I have, let's say for every $1,500 that we have in this strategy, going into today I believe we are at roughly 2200 in terms of like where the money's progressed to on the year. And we have roughly about $7.20 or $720 on the table for that. So my point is that when you hear the trade that I have on, it's of there's not a very larger section of the concentrated risk section that's happening. So wanted to clarify that first. Second thing that I want to go through on it is going into today, just had a regular diagonal spread going, was long the October 244 call on SPY and short the weekly 247 half call. I had a limit order in to where as soon as I could get filled at 10 cents, if the market were to go down, I'd get filled on it. On the short call, obviously that happened right away. Now, the question then becomes with this, I got back into this trade, meaning I started buying premium again on July 20th. Was out of the market for a good chunk of July. I was selling some put spreads before, which I was talking about on the show, but July 20th is when we got into this trade again, or started being long premium again and doing this diagonal spread. So since then, in terms of doing stuff, getting into one, getting out of another, doing a half position and this, that, or the other, for I would say a vast majority of the clients that are in this, we had gained, and there's a few people that it would have been a little bit more, some a little bit less, but for the most part, 74 cents. So going into today, after we got filled for 10 cents on that short call, would then basically become $6.04 on the OC 244 call that I'm in right now. Now, obviously today it took a hit, and that's down to $4.95. So roughly $1. I'm comfortable staying in that position because of the fact that it's roughly 25% of the risk capital that we have available at this point in time. Normally, I probably would have done a few other things, but I don't want to react. I have the luxury of not reacting as quickly because, well, let's face it, we're up quite a bit on the year from a percentage standpoint, and I'm not buying this. I'm not necessarily thinking today is the time to sell and get out as of yet. Now, tomorrow, I want a little bit more confirmation tomorrow and see what happens overnight, personally. Now, with that being said, what the heck can you do today in something like this? And can you sell a covered call on the way down? Well, yeah, you could, but then, of course, Murphy's Law dictates that the market's going to snap right back and you're going to miss out on the rally the second that you sell a covered call. It's very tempting to do, but the problem with that is that when doing something like that, you're giving up the potential for the market to come back. So what I decided to do today is I sold a call spread. I still want to collect some premium on the way down, and I want to be able to take some type of advantage of the higher VIX today and actually get a little bit of a premium sale. So what I decided to do is I ended up selling the 245, 246 call spread that expires tomorrow, in addition to being long the 244 call that is actually expiring in October. Now, by doing that, let's say that we do just rally all the way back to high heaven. Well, you know what? I'm cool with that because I'm still long quite a bit of deltas. And yeah, of course, it would have been better off to sit on the call. But remember, we're trying to be responsible and manage this in the best possible way. Now, but that is not all. But wait, there's more. With that being said, I still want to have a few more deltas on the table with this. Now, I was originally trying to make this kind of an iron butterfly when doing this, but well, the market was moving fast enough to where it didn't really quite work out as well as I wanted. So I wanted to sell a put spread on this as well. Now, of course, it went against me right away when I sold it, but I'm fine with that because of the fact that I already got a pretty nice chunk of premium on the call spread. I sold the 244 half, 243 half put spread pretty much right after I did at a similar times that I was doing the calls. So this was a process that went on. This is one of the reasons that the BBI was didn't really use the restroom that much today. So with that being said, all in all, what I was able to do is this turned out to be an iron condor. It's been years since I've done an iron condor, and that's kind of what this turned into. It's become a bullish iron condor. And the reason with which I'm doing it for one day is that all in all, on this one day iron condor, I'm able to take in 60 cents. I want to be able to sell something when the market is down like this and the VIX is up, 45% in one day. I just got to sell something. I'm feeling the word degenerate's going to come out of Longo's mouth here in a second. But when doing that, let's say that I am totally wrong to the upside or I'm totally wrong to the downside. If the market stays the same and I make money, great, but let's just assume I'm wrong. I always want to assume what happens if I'm wrong when doing this, and does the risk reward make sense? I'm risking 40 cents for the potential to make 60. Now, in reality, I'd probably be out much sooner than that. I'll probably be out at the open tomorrow, good, bad, or indifferent. But does this make sense for the risk reward and what happens? Now, let's say the market just stays the same. Well, this is a obvious winner if it stays the exact same. Don't necessarily think that's going to be the case, but let's just say it does. Well, any idiot can make money on that. But let's say the market just shoots way up tomorrow. It just comes right back. We gained 35 points in the first hour of trading tomorrow. Well, I'm going to lose on this condor that I started off, but I'm making money on the long call. I'm making a very nice chunk of money on the long call because of the market coming up higher. On top of that, let's say that the market does shoot up, maybe not necessarily 35 points right away, but let's say it does start coming up rather rapidly, maybe 10, 15 points. If that's the case, then volatility is going to come down. Most likely, you never know, of course, but it's likely that vol is going to be coming down. And I'll have the opportunity to close out the condor for a rather minimal loss, if that's the case, possibly even a gain. You never know in terms of how it's going to happen, what time it's going to happen, when in the morning it's going to happen. But likely, if markets go higher tomorrow, vol will go lower. On top of that, we'll have time decay on our side as well. Now, let's say that markets do go down, and let's say that I'm just totally wrong on this. Now, I'm going to work to get out of this trade. I'll try and get out of the call side first, then possibly wait for a little bit of a bounce, get out of the put side. So if it does continue to go lower, if that's the case, then, well, I'm out an additional 40 cents, let's say. Let's say I just totally screw this up, and I'm out an additional 40 cents, my maximum loss on this trade. Here's the benefit of this. I really don't. It's 40 cents. It's about 2% of the overall trading capital. And of the overall trading capital, that comes out to typically in an actual account, roughly 5 to 10% of an actual account. So I'm risking probably less than 0.5% on a trade like this in terms of what most people's portfolios are. Some clients more, some clients less. But overall, it's a very minuscule amount. So what I want to go through with today, or I want to explain today, is that number one, if you're going to do what I'm just describing, take small position sizes. I lost $1 today on an option contract, on a long option contract. It was a small enough size to where it's not something with which I'm really stressing about. And on top of that, with the big positions that we have, they're very well hedged. Now, the next thing that I want to emphasize on this is be prepared. If the market goes your way, if it doesn't, and if it doesn't go or if it goes up, if it's going to go down, or if it's going to stay the same. What is the consequence to all three of those things? Now, the next thing that I want to mention is I am foaming at the mouth to try and sell some additional puts to get into this marketplace with some money that I do have on the sidelines. I'm not doing it today, or I didn't do it today just because of there's an old saying, you don't want to catch a falling knife. Let's say we rally a little bit tomorrow morning. And if that's the case, that would be when I would likely feel more comfortable selling puts to get into this marketplace. We have higher volatility. I can sell puts likely further out than I normally would have because of the fact that we have higher volatility. And because of that, I would prefer to miss a few points instead of trying to catch a falling knife. I'd feel much more comfortable with that way to see that the market does bounce off of or bounces higher tomorrow, with that being said. Now, with this, understand my overall philosophy remains the same. I'm long-term bullish, short-term cautious. I didn't really have a lot of action with the larger money today because, well, the hedges were already in place. And so it's not to the point to where we're past the line in the sand where any action needs to be taken. Talked about a little bit in the trading block of where we are on some things. But for now, most of the action was in probably less than 5% of the net worth of most of my assets under management and most of my clients. So that's what's happening today. And that is the strategy block for August 10th.
We're still waiting, though. You didn't tell us why you bought those puts.
Yeah. Why did you buy those puts?
Those puts on the VIX at 11?
Yeah.
Yeah, I'll be, this is all just a sham. I'm really just short millions and millions of dollars of stock. I want everyone to think that I'm a bull, but
oh, really?
Yeah, it's all just a big sham. Those VIX puts were me.
I like
oh
this.
my gosh! Speaking of
regulators.
Speaking of yesterday's VIX put, take a look at the vol markets after hours. There is some ugliness there right now in terms of vol. The market's doing fine. It's only down about $2 in the futures, but futures have moved another big leg up after the bell in VIX. So maybe these were married puts, and the guy is long 5,000.
There you go. He's long boatloads of VIX, and so he's really smiling all the way to the bank.
Yeah, maybe you never know, or maybe it was part of a variance. Maybe it was long variance.
You've been drinking a lot of Tosaw's Kool-Aid there, and you're getting the sunnier side now. Sunnier side.
Yeah, no. Well, we'll see. I'll tell you this. Somebody just reminded us. Trump put his name all over the stock market. So if you think he's not going to, at any given time, he could say something that could drive the market all the way back. But this Korea thing, geez, it's they aren't messing around.
So we used to have the Bernanke put, now we have the Trump call. Is that what you're saying?
It might be a Trump call. I mean, think about it. There's certainly some good reason to think that he'll try, if things get much worse, he'll try and fix it.
I will think about it. I also will think about your questions, listeners. We've got a little bit of time, so we'll see if we can squeeze one or two in. A quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, mail block time. Let's see what we can squeeze in here. Really quick, we asked you guys at the beginning of the week, asking what your thoughts are about Box. Box launching a new trading floor over there on the Board of Trade. Do we need another floor to compete with Philly and NYSE, CBOE, and all the rest? We gave you 4 choices. Yes, for complex orders. No, there are too many exchanges. NA, I only trade electronically, or I'm dusting off my trading jacket. Mark, you go first. What do you think is winning?
I'm dusting off my trading jacket. Who doesn't think this is a huge additive? I mean, the amount of paper that's going up on floors has been increasingly increasing at a dramatic pace for several years, right? I mean, ever since they began electronic options, the amount of paper being put up on floors has just gone up and up and up. Oh wait, it's the exact opposite of that.
If you can't tell listeners, he is dripping with sarcasm in his comments. So 1 vote for Mark. I think he's still optimistic, though. He is dusting off his trading jacket. Mr. Uncle Mike, you never had a jacket, so what's your vote here, sir?
No, why not? I'll buy a trading jacket. I want to be like Mark and Mark.
There you go. Going to join the party about 2 decades too late, but the party's still
what the heck
still going in some capacity. So far, our audience saying a resounding no. Too many exchanges, 60%. A third though coming in. The hardcores in our audience, the former pros, saying they're dusting off their jackets, and 7% saying no, we only trade electronically. Interesting. No votes yet. No, not a single vote for yes. No vote for yes. It's some complex orders out there. So I thought that was kind of weird. Speaking of weird, some stuff popping off after hours, like Mark's saying. Let's get into it with our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block, where we tell you what we're watching for the rest of the week into the weekend. Also, what's finishing up here at the show. Mark mentioned some of the after hours with the vol, the after hours, and the earnings. Also moving a little bit. We mentioned a couple names at the top of the show. Snap. They were pricing in about 2.25, so over 16% in the after hours. Now they've extended their move to the downside. They're off about 12% now, so pretty much doubling their sell-off from the top of the show. So I guess that bearish sentiment continues out there. Not quite up to 16% yet, but it's getting there. So all the Snap bulls may be hoping this was going to be the time. Perhaps not. All those new filters, not enough to save the day out there. Nvidia also, let's see, they were pricing in about $15 or about 9% And in the after hours, they're off about exactly a third of that, 3.33%. So not quite the downside palooza some had thought maybe, or perhaps even the sell-off. Of course, they did have a sell-off already coming into today, so I guess you add the two together, but that's not quite how it works. Either way, interesting stuff. Maybe some of the Nvidia bulls taking a bit of a break, but we're not taking a break here. We're not done yet. Instead, let's go back to what we're watching for the rest of this week. It's kind of hard to focus on anything when VIX is going crazy and Korea's going crazy and everything else. But that said, let's start with Uncle Mike. What could you possibly be watching for the rest of the week, sir?
Fire and Fury, VIX, and SPY. I don't know what else you can watch at this point in time. Looking at that, I'd like to. I've had money in cash for a long time, waiting to get back into IBB. I've been kind of doing wheel trades with that. So looking to get back into that in some way, shape, or form in the pharmaceuticals, and also just watching technology in XLK, the Qs, some technology names in general, just to kind of see how they react to this. And tomorrow's going to be a key day, up, down, or sideways.
You guys in RCM never met a wheel trade you didn't like. You're just crazy wheelers out there in RCM land. By the way, before you say you can't watch anything, I should remind you there are JCPenney earnings tomorrow, so I know you can't take your eyes off that. So.
Oh.
As Mark is knocked off his chair. That's it, Mark. I don't know if you're in an earthquake zone out there in California or what, but what else? Fire and Fury, what else is catching your eye for the rest of the week, sir?
Fury and Fire. And by that I mean Nick Fury, because I'm going to watch as much Marvel as I possibly can this weekend as a way to honor our glorious president. So, yeah, I mean, I think it's all about kind of what does VIX do next. And it kind of looks to me like it wants to make a trip to 20, although my son just said, well, Steve Mnuchin will solve everything.
He does love himself some of the nooch, as the cool kids call him. But you're right, we didn't even get a chance to mention, Disney coming off Netflix moving, Disney earnings earlier this week. Some things are actually happening today, so didn't have a chance to even hit on all of that. Maybe we'll sink our teeth into that next week, listeners. But before we go, let's go around the horn again one more time, starting with Uncle Mike. Uncle Mike, sir, what perchance is cooking over there in the land of we'll roll your puts for you, a.k.a. RCM?
Hey, if you want to be with a financial advisor that days like today become much less stressful than other financial advisors, give me a call. Be happy to work with you. And if you do end up working with me, whether you have several $1 million or just several $100, I will give you, if you end up working with me, if the minimums and restrictions do apply, I will throw in an option pick gift card for $100 for anything with which those gentlemen work with over there at the option pit. So give me a call at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
All right, and last but not least, if he has endured and survived the earthquake of craziness, Mr. Meatball, give us a hit again, and we'll tweet it out after, too. What's coming up with that Professional Trader Summit, sir?
Yeah, it's coming up September 27th through the 28th. We'll do a 29th. We're going to do a live option block. Should be a lot of fun. Got me, Scott the Cow Guy, Phil Flynn, Todd Gordon, a lot of really smart people coming talking options, energy, futures. It's going to be really great. And so if you want to come and meet me and meet Mark, and we'll even see if we can drag Mike Tosaw out of St. Charles, then come on down to Chicago. End of September, the Cubs are in town, so it's a great time to go see a game, and we'll have a great time. Again, Mark will put a link in the show notes, and just one more comment on Mike Tosaw. You know what? He's not lazy or stupid. That's why he uses options.
There you go. High praise. I think he has that on his business card. Mike Tosaw. I am neither lazy nor stupid. I like that. That should be your new marketing slogan. On behalf of the neither lazy nor stupid Mark, or indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, all the fun stuff you guys do. Hit us up with questions and everything else. Enjoy the fire and the fury. And we shall see you back here next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.